أول chapter هنبدأ نتكلم عنه هو accounting for receivables. Accounts receivable are the amounts owed from customers due to providing services or selling goods on account. They are the most significant type of claim held by a company. This chapter will be divided into three parts. The first part is the recognition of the accounts receivable. The second is the valuation of the accounts receivable. The third, the disposition of accounts receivable. First of all, we will talk about recognizing the account receivable. When the company recognizes that it owes an amount of money from customers, for sure when it sells merchandise on account. Suppose that we have this example. On January 1st, X company sold merchandise inventory with $11,000 to a company. The term of payment 10/30. If the payment is made within 30 days, these customers will be granted a 10% discount. On January 1st, Polo company returned merchandise worth $11,000. Then the amount of the accounts receivable will be decreased. On January 20, Polo company paid the amount due. Required record the above transactions in the general journal. On January 1st, when we record sales, then we will record account receivable and sales revenue. Accounts receivable in the debit side as it is an asset, sales revenue in the credit as it's a revenue. On January 5th, the customers return merchandise worth $1,000. This means that the amount of sales will be decreased by the return. Then we will have a new account called sales return and allowance, and it's a contra sales, the sales in the credit side as it's a revenue, then the sales return and allowance will be in the debit side, and for sure the amounts of the account receivable will be reduced or decreased. And the account receivable is an asset, increase in the debit, decrease in the credit. Then sales return and allowance and account receivable. Now how much the amount of money owed by the customers? I sold merchandise with 11,000 and they return 1,000 merchandise. Then the amount of the account receivable is $10,000. When the company collect the amount due from customers on January 20, the company will grant the customers a 10% discount. Then we will have another account called sales discount. The sales discount will be 10% from the account receivable. The accounts receivable will be collected in the credit side by the remaining amount, 11,000 minus 1,000, then it will be $10,000. Then the sales discount will be 10% from the $10,000, it will be 1,000. Then the amount of the cash that will be collected, $9,000. What will be the journal entry if the payment is made without discount? Suppose that the customers paid the amount due on 15th of February, for example. Then it will exceed the grace period, which is 30 days. Then they will not be granted any discount. Then the journal entry will be cash and account receivable. That's all what we need to know about the recognition of the account receivable. The second most important part is the valuation of the account receivable. بمعنى تاني, do we expect to collect all the amount of the account receivable due from customers? For sure not. So what will the company record if a portion of the account receivable is not collected? Or what the company will record if the amount of the account receivable was written off? Written off means that it will not be collected again. Okay, then accounts receivable will be valued by two ways, either by the direct write-off method or by an allowance method. Direct write-off method is used when the company is sure that the amount of the account receivable will not be collected again, so it's considered a certain loss. When I will use the direct write-off method, I must be instructed in the problem that to use this method, he must tell me use the direct write-off method. Okay, then if I have a portion from my account receivable that will be written off, will not be collected again, what will be the journal entry? For sure the portion that will not be collected will be considered a loss, called bad debt expense, and for sure expenses recorded in the debit side, and we didn't collect the receivable, then the account receivable decreased as the amount of money will be written off. This means that it will not be collected, then the account receivable will decrease in the credit side. Then the journal entry in the case of the direct write-off method will be bad debt expense and accounts receivable. For example, assume that X company uses the direct write-off method and assume that the management authorized the write-off of $10,000 of the account receivable. Then what will be the journal entry? The journal entry will be bad debt expense and accounts receivable. Not all the companies use the direct write-off method. And some companies expect that a portion of the accounts receivable might not be collected at the end of each period. Okay, then it's an expectation, not real amount. Okay, then the cash or the net realizable value is the amount expected to be received. For example, assume that the account receivable at the end of the year for sure the account receivable recorded in the reported in the balance sheet in the current asset section, current assets, accounts receivable with $100,000. I'm expecting that $30,000 from the account receivable will not be collected. Then I'm expecting to collect 70,000. The 70,000 called net realizable value, the amount expected to be collected. Then again, this method estimate that there is a portion from the account receivable might not be collected. Okay, this estimation is made at the end of the accounting period. So why I didn't write that the account receivable is $70,000? Because we owe customers 100, not 70, but we estimate that $30,000 estimated not to be collected. Then we need to find another account, a new account that will decrease the account receivable. This account will be considered a contra asset, because the account receivable is an asset recorded in the debit. Then the contra asset will be the opposite, will be recorded in the credit. This contra account will be the allowance for doubtful account. Allowance for doubtful accounts, or ADA. ADA is considered contra asset, increase in the credit, decrease in the debit. This is the estimation that there is a portion from the account receivable might not be collected, and the allowance for doubtful account will be recorded in the credit side. Okay, then if I want to make an estimation, okay, that there is a portion from the account receivable might not be collected, then the estimation will be bad debt expense. And in the debit side, can I write in the credit side accounts receivable? For sure no. Why? Because it's still an expectation or estimation. This means that the account receivable still due from customers, so I just expect that there is $30,000 might not be collected. Then the $30,000 will be recorded as an allowance for doubtful account. This is the estimation, the amount of the profits that will be retained to meet a future profit. I'm sorry. This entry will be bad debt expense and allowance for doubtful account. For sure I couldn't write account receivable. Why? Because it's still an estimation. Okay, I will discuss later on how we will find or how we determine the $30,000 or how we calculate the $30,000. But first of all, if $10,000 from will be written off, all this under which method? Under the allowance method. Under the allowance method, not the direct write-off method. Okay, under the allowance method. Okay, if our expectation become real, okay, and the amount of money will be uncollectible, then we will write that we will cancel the estimation, the allowance for doubtful account, and then we will write in the credit accounts receivable as the amounts due from customers will be written off. Written off means that it will not be collected. Then the accounts receivable will be decreased in the credit side. Again, remind me, when we record the amount of money written off in the direct write-off method, what we record, what we have recorded? We recorded a bad debt expense and accounts receivable, but this under the direct write-off method, right? You know, in the accounting, if we wrote an account in the debit and then we wrote it in the credit, they will cancel each other. We wrote the allowance for doubtful account in the credit, then we wrote it again in the debit, they will cancel each other. Then it will be as if I wrote from the beginning bad debt expense and account receivable. But under the allowance method, it will be recorded in two steps, not one step at the direct write-off method. We must make an estimation, then after the estimation we will make a write-off if the amount will be written. If not, there will no. Then if I want to write the estimation, then under the allowance method, what will be the journal entry? Bad debt expense and allowance for doubtful account. Okay, $30,000. When this estimation will be made at the end of the accounting period. Okay, معلش الخط وحش عشان الباد اللي بكتب عليها الخط بتاعه وحش. Second, if under the allowance method the amount of money will be written off, then we will record ADA, or allowance for doubtful account, and accounts receivable. Okay, accounts receivable, as the amount of money will not be collected. What will be the entry if the amount of money previously written off will be recovered? Recovery of the amount of the accounts receivable previously written off. Then we will record two entries. The first, to correct the write-off. Why we have to correct the write-off? Because the amount of money recovered, then from the beginning we shouldn't made a write-off. Then I want to cancel the write-off, as the amount of the accounts receivable was recovered. Then what will be the journal? We will write accounts receivable and ADA to cancel the write-off. Then we have collected the receivables, then we will write cash and accounts receivable. Then the recovery will be recorded in two journal entries. Okay, then if we return back or make a general review, okay, American Furniture has credit sales $1,200,000 in 2005. $200 of this amount remain uncollectible at December 31st. The credit sales are the sales during the year. Okay, during the year I sold merchandise during the year with $1,200,000. At the end of the year, $200 remain uncollectible. This means that the accounts receivable is $200. This means that we have collected during the year from the net credit sales 1,200,000 minus 200, 1 million. Okay, then $200,000 is the accounts receivable. Okay, let's move on. The credit manager estimates that $12,000 will be uncollectible. Then we will record an estimation, not write-off. Okay, concentrate. Then we will record bad debt expense and allowance for doubtful account. In the balance sheet, we will record on a balance sheet we will record account receivable minus ADA. Okay, ADA with $12,000, then the net realizable value 188. On January 1st, 2006, the company manager authorized the write-off of $500 of the balance owed from customers. Again, we are following the allowance method. Then if we record the write-off under the allowance method, then ADA and accounts receivable. Why ADA and accounts receivable? We cancel the estimation and decrease or reduce the accounts receivable. Okay, on April 1st, 2006, the customers pay $500. This amount have been written off. Then it's a recovery of the amounts previously written off. Then we will record the recovery in two journals. Okay, the first, accounts receivable and ADA. The second, cash and accounts receivable. Again, we will summarize the journal entries. Okay, under the direct write-off method, we will record bad debt expense, accounts receivable. Bad debt expense because it's a loss. We have or owed the customers an amount of money and they will not pay this money. Then I lose my money. This considered a loss, called bad debt expense and accounts receivable. Under the allowance method, it's a different method, okay? No company used the two methods in the same time or at the same time, okay? Under the allowance method, if we want to record the estimation, then we will record bad debt expense and allowance for doubtful account. I will remind you with that the estimation is made at the end of the year, okay, not at the beginning of the year. I will discuss this point later on, okay. Recording the write-off of the accounts receivable, of the uncollectible accounts allowance for doubtful account and accounts receivable. Recording the recovery of the uncollectible accounts previously written off, accounts receivable ADA, and cash and accounts receivable, okay. How we made the estimation? We have two. Again, in the estimation we record bad debt expense and ADA, okay. How we will estimate that there is a portion from the accounts receivable might not be collected? We have actually two methods. The first method called percentage of net credit sales. Again, I am estimating that there is a portion from the accounts receivable might not be collected, okay. This portion will be estimated by two ways, two methods. Number one, the first method, percentage from net credit sales. First of all, under the allowance method, how we will record the estimation? Bad debt expense and ADA. As I give you the last example, it was 30,000, okay. And on the balance sheet, it will be recorded accounts receivable minus ADA, minus the amounts. If the accounts receivable was 100,000 and I'm expecting not to collect 30,000, then I'm expecting to collect $70,000, okay. I will discuss now how, or in another way, from where did we get the $30,000. This estimation will be, number one, from percentage of net credit sales, okay. Suppose that we have a company, X company, has an accounts receivable with $100,000 at December 31st, 2017 at the year end, and ADA balance 0. The company management estimate %1 from the net credit sales to be uncollectible, okay. The net credit sales, the credit sales was $3,300,000. Sales return, sales discount, sales return $100,000, sales discount $200,000. This means that the net sales, what do we mean by net sales? Net sales, or the sales minus sales return minus sales discount. Again, sales minus sales return minus sales discount. This means that the net sales is $3 million, okay. What is the difference between net sales and accounts receivable? The company sold merchandise during the whole year with 3 million. At the end, the remaining amounts uncollectible $100,000. This is accounts receivable and this is the net sales. Okay, then can we get the bad debt expense, the estimation of the amounts that is expected not to be collected? For sure. Why? The percentage that will be uncollectible multiply the net credit sales. Okay, the percentage 1% given in the problem. How the company estimate this percentage? Based on its previous experience. Multiply the net credit sales $3 million. Then the amount of the bad debt expense $30,000. How the company will record the estimation at the end of the year? It will record bad debt expense and ADA with $30,000. Can you report the accounts receivable on a balance sheet? For sure. Why? This is the ADA, allowance for doubtful account. Beginning balance 0 and adjustment for 30,000, the ending balance 30,000. Then when I write that the account receivable in the current assets in the balance sheet, the accounts receivable $100,000, but I'm expecting not to collect $30,000 ADA, then I'm expecting to collect $70,000. Then the first method for estimating the bad debt expense is called percentage of net credit sales. Percentage of net credit sales. Again, percentage of net credit sales. Okay. Suppose that we have this example, another example. Coca-Cola company use percentage of sales basis. If the net credit sales were 800 and the accounts receivable 100, and the company management concludes that 1% of the net credit sales might not be collected, then the bad debt expense will be 1% from the net credit sales. Where is the net credit sales? 800. Then I'm expecting not to collect $8,000. $8,000. Then bad debt expense and ADA 8,000. Let's make the T account for the allowance for doubtful account. ADA credit balance 1,700 and adjustment for 800. Then the ending balance will be $9,700. Okay. The second method for recording the estimation called percentage of accounts receivable. Percentage of accounts receivable. Okay. I will explain, then we will solve a problem about it. Okay. If the company at the year end, given the balance sheet, accounts receivable was 100,000, ADA 0 at December 31st, 2017. We want to make the estimation for the next year. Then given in the problem, the company management estimate 30% of the accounts receivable to be uncollectible. Okay, then we will get the bad debt expense. In the method of percentage of accounts receivable, it's called balance sheet method. Balance sheet method. In this method, we must consider the balance of the ADA. For this reason, the bad debt expense in this method called required balance. What is meant by required balance? My ending balance. This will be the final balance for the ADA. I'm expecting not to collect 30% from the accounts receivable 100. Then the amounts expected not to be collected will be $30,000. How we will record the $30,000? We will make an adjustment ADA at the beginning balance 0, the required balance $30,000. Then we must make an adjustment with $30,000. Okay, then we will record bad debt expense and ADA with $30,000. Okay, assume another example, but instead the accounts receivable beginning balance was $5,000. Again, this method consider the beginning balance or the recorded balance in the ADA. I want to reach to $30,000 required balance. This method is different from the percentage of net credit sales, as I said. Okay, then we must make an adjustment for $25,000 adjustment in order to reach estimation of $30,000, because the ADA already contain or recorded by 5,000 and my required balance now is 30,000. Then we must make an adjustment for 25,000. Then we will record bad debt expense and ADA with 25, not with 30. Why? Because I want to reach to 30. Then I must make an adjustment with $25,000. Can you write the amount of the accounts receivable in the balance sheet? For sure, accounts receivable minus ADA. Accounts receivable $100,000. How about the ADA? $30,000. Not 25? No, not 25. Why? As I said, I made an adjustment with $25,000 in order to reach the $30,000. Okay. Another example. Suppose that the ADA contain a balance of $8,000. Okay, and I want the ADA to reach 30,000. Then we will make an adjustment with $22,000 and so on. Okay, this method is called percentage of accounts receivable. Then the difference between percentage of accounts receivable and the percentage of net credit sales, that the percentage of accounts receivable, we must consider the balance in the ADA. Okay, suppose another example, that we have a balance of $2,000 in the ADA, in the debit, not in the credit. As we said before, that the ADA, the balance must be in the credit as it's a contra asset, and our required balance is $30,000. Then how much will be subtracted from 2,000 to reach 30,000? $32,000. Why 32? 2,000 to cancel the wrong estimation, the $2,000, and 30,000 to record the new estimation, which is $30,000. Then we must make an adjustment with $32,000. Then if the ADA has a debit balance, we will make plus to the required balance. Then the adjustment will be 32,000. Why we record an adjustment 32? To reach ADA with $30,000. Okay, suppose that this example, accounts receivable 100, a company ADA $6,000, and the company estimate that the percentage uncollectible $10,000 from the account receivable. 10% from the account receivable. Record the estimation. Okay, can you determine the amount of the estimated bad debt expense? For sure. The estimation that will be recorded will be 10% from the 100. 10% from 100. Then the bad debt expense estimated or the required balance $10,000. Don't even record the $10,000 unless you check first the balance of the ADA. The ADA recorded balance already $6,000, and I want a required balance of $10,000. Then we will make an adjustment with $4,000. Okay. In the balance sheet, account receivable minus ADA, account receivable 100 minus ADA 10,000, then I will reach to $90,000. Okay. The percentage of accounts receivable, also called accounts receivable aging or aging method. Why aging method? In the previous example, we multiplied the $100,000 accounts receivable multiply 10% estimated to be uncollectible. Some companies instead age the account receivable. Suppose that this example, I owe customer A, B, C, D, E and others 39,600,000. From the 39,600, $20,000, $27,000 from the account receivable not yet due. Then the estimated percentage to be uncollectible could be 2% or 1%, very little. The number of days past due, 1 day to 30 days, 30 to 60, 60 to 90, over 90. بمعنى تاني ان كل ما الوقت يعدي وانا ما حصلش الفلوس اللي ليا عند الناس، ال estimated percentage to be uncollectible بتزيد. 2% from the 27, 5% from the 5,800, 10% from the 3,000, 20% from the 2,000, 40% from the 1,900. Then the total estimated bad debt expense or the required balance 2,285. 2,885. Not as the previous example. In the previous, this the total amount of the account receivable 39,600. Okay. Don't even record this amount unless you check the balance of the ADA first. Okay, the ADA balance 285, and I want to reach a required balance of 2,285. Then we will make an adjustment with $2,000. This is wrong. This is 2,000, not 2,500. Okay. What if the ADA balance in the debit side 215 and I want to reach 2,885? Then we will add the required balance to the temporary balance or to the balance given in order to reach to the required balance 2,285. By disposition of accounts receivable, the third part and final part of this chapter is the disposition of accounts receivable. Disposition means that we want our money immediately. And we will not wait until the due time of the accounts receivable. Then we will sell the accounts receivable to a factor as a bank, for example, the cash immediately and collect our cash immediately. Okay, for sure the bank will not offer this service for free. It will take from 2 to 6% as a service charge. Suppose that this example, assume that X company sold the merchandise inventory of $600,000 to HSBC. Then I collect cash from selling the accounts receivable. Accounts receivable will decrease. How much cash I collect? I will collect the cash after subtracting the service charge 2% from 600, 12,000. I will collect the remaining amount 588. The 12,000 is a service charge. Why the bank takes service charge? Because I will collect my money immediately and the bank will collect the amount later on. So the bank will take a service charge in exchange for this service. Okay. Another subject is the credit card sales. Credit card sales means that we sell inventory or sell as a merchandiser via credit cards. If I'm a merchandiser and I sell inventory through credit cards, Visa or MasterCards, these cards issued by banks. Then if I sell merchandise through credit cards, as if I sold the merchandise for cash, then I will record cash and sales revenue. But the bank will take a service charge in exchange for this service. The bank facilitate the selling process, then it will take a service charge in exchange for this service. Okay, the service charge here in this problem 3% from the sales, 3% from 1,000, 30,000. Then I will collect 870,000. Let's move to or let's solve problems on the accounts receivable. Okay, I will solve the problems quickly. On July 1st, now company sold the merchandise on account to estimate for 15,200 210. Okay, accounts receivable sales. On July, B company returned merchandise with 3,800, then sales return and allowance accounts receivable. On July 11, I will give or grant them discount or not. 11 minus 1, 10 days, the last day in the grace period, then they will receive discount as they paid the amount due. Okay, cash, sales discount and accounts receivable. How much accounts receivable? Accounts receivable 15,200 and they return merchandise with 3,800, then the remaining amount 11,400. They will be granted 2% discount from 11,400. Okay, okay, again I will summarize. We have two methods in the estimation or to estimate the accounts receivable. Again, if we want to estimate the under the allowance method, we at the year end we write bad debt expense and ADA. If we have an amount of the accounts receivable be written off, then we will write ADA and accounts receivable, or this under the allowance method. If the amounts of the accounts receivable previously written off were recovered, then we will write accounts receivable and ADA. Then we will write cash and accounts receivable. How we will estimate the portion of the accounts receivable that might not be collected? We have two methods. First, percentage of net credit sales. Second, percentage of accounts receivable, or called aging method. In this method we must check the balance first of the ADA. Okay, let's solve some problems. A company elect to use the percentage of sales, okay, to record the bad debt expense. It estimates 2% of the net credit sales. Sales revenue 800, sales return 45, then the net credit sales will be 755. I'm expecting not to collect 2% from the 755. Then bad debt expense and ADA will be 15,100, 15,100. Second, the company used percentage of receivables. Okay. Percentage of receivable, we must consider the balance of the ADA. Okay. Percentage of receivable, we will estimate that 1% of the accounts receivable will be uncollectible. Accounts receivable at the end of the year 40,500 $450,000 at the end of the year, and the allowance for doubtful account credit balance 1,500. Again, we must consider first the balance of the ADA. Okay, then the bad debt expense or called required balance will be 1% from the $450,000 multiply 1% will be 4,500. But don't record this entry as bad debt expense and ADA unless you make sure that, or you check first the balance in the ADA. Okay, the balance here was 1,500, and I want to reach a balance of 4,500. Then we must make an adjustment for $3,000. Okay, if in this problem was required to prepare the balance sheet, what will be the journal? The balance sheet will be accounts receivable in this problem 450 minus the ADA. Where is the ADA? The required balance. If the required balance 4,500, why we recorded 3,000 to reach to this amount? This will be valid under which method? The percentage of accounts receivable only. Okay, again repeat the problem, but instead the ADA balance was in the debit side with 800, not 1,500. These are independent situations، يعني كل مسألة ملهاش علاقة بالتانية. ADA debit balance 800, and this is a result of a wrong estimation, and I want to reach to required balance 4,500. Then how much will be subtracted from 800 to reach to 4,500? $5,300. Okay, another example. The ledger of JK company at the end of at the end of the year show accounts receivable 100, accounts receivable, this is accounts receivable 120, sales 840, and sales return 30,000. Okay, required number 1 or A, assume that the company used direct write-off, or under the direct write-off and the company determines that 1400 balance is uncollectible. Uncollectible means will not be recorded, collected. Then we will write under the direct method, we will write bad debt expense and accounts receivable, not ADE. This is direct, not allowance. Concentrate. 1400, 1400. Okay. Number B. This is instructions are unrelated. Okay. B. If the ADA balance has a credit balance 2100, prepare the journal entry or journalize the adjusting entry at the year end. He wants to make an estimation. Okay. Assume or as if the percentage, number 1% from net sales, number 2 10% from accounts receivable. These are two unrelated problems. Okay. Net percent, 1% from the net sales. How we will get the bad debt expense? The bad debt expense will be 1% from the net sales. Where is the net sales? Sales minus sales return and allowance. 840 minus 30, 810. 1% multiply 810, it will be 1% multiply $810,000. It will be 8,100. Then we will record bad debt expense and ADA 8,100. You will tell me that the ADA credit balance was 2,100. In the percentage of net credit sales, we ignore the balance of the ADA. This is valid only in which method? Percentage of accounts receivable, as I will show it to you right now. Okay. Suppose that we will solve as if the estimated bad debt expense were 1% from the accounts receivable. What will be the journal entry? 10% from the accounts receivable. We will get the bad debt expense. Bad debt expense under this method is called required balance. 10% from the accounts receivable. Where 10% from the accounts receivable? Where is the account receivable? 120,000. Then it will be $12,000. Don't record this entry unless you check the balance of the ADA, debit or credit. Here is in the problem, he told us that the balance credit 2,100 and I want a required balance 12,000. Then we will make an adjustment with 9,900. Okay, and that's all. I will solve a complete problem right now, including comprehensive, include all the ideas. At December 31st, 2005, a company reported the following information on its balance sheet. At December 31st means that at the year end, the account receivable at the year end or at the year beginning or at the beginning of the year. We will see it right now. Accounts receivable ADA, okay? He didn't mention the ADA debit or credit. For sure it's a credit balance, okay? During 2006, the company had the following transactions. Then the balances given will be at the beginning of the year. Okay. Then sales return, collection, write-off, recovery. I'm required to journalize these transactions. Okay. I will journalize each transaction. Number 1, sales on account, accounts receivable and sales. 2,670, 2,670. Number 2, sales return 40,000. Then we will record sales return and allowance and accounts receivable with 40,000, 40,000. Number 3, collection of the accounts receivable, then cash and accounts receivable, 2,300,000, 2,300,000. Then number 4, recovery, write-off of $65,000. This is under the allowance method, not under the direct. The direct will be directly written. Use the direct method unless you will must use the allowance method. Write-off, then we will write ADA and accounts receivable 65. Number 5, $20,000 of the recovered bad debt previously written off were recovered. Oh, $20,000, $20,000. In the recovery, I told you that we will write 2 entries. Number 1, to correct the write-off, accounts receivable and ADA. Number 2, to record the cash and accounts receivable. I will post all these transactions in the general ledger, of accounts receivable and ADA. Okay, this is the accounts receivable and this is the ADA. The most common mistake that committed by students, they forget about the beginning balance. No, the accounts receivable beginning balance 1,020,000 and the beginning balance for the ADA $60,000. Then we will post these transactions. The ending balance will be, after posting, will be 1,285,000 and 15,000. 1,285,000 and the ending balance here $15,000. Okay, let's see what is the other requirements. After getting the ending balance, we will read the third required. Prepare the journal entry to record the bad debt expense for 2006, assuming that an aging of accounts receivable indicates that the estimate of the bad debt $95,000. This means that the bad debt expense given the required balance $95,000 already given. This number come from the percentage uncollectible multiply the accounts receivable. But in this problem it was already given. Okay, then don't record this amount. He want the adjustment bad debt expense and ADA. Don't record this amount unless you check first the balance of the ADA. We have here $15,000 balance and I want the balance to reach $95,000. Then we will make an adjustment with $80,000. 80,000, 80,000. At the end, if the required were to prepare a balance sheet, then you will write an accounts receivable minus ADA. Where is the accounts receivable? 1,285,000. Where is the ADA? $95,000. And that's it. Okay. This is for the accounts receivable. Thank you so much.